Want to welcome everybody. It's a busy October to the October WASDE report. We're going to give you some live numbers here in just a little bit. You got Brooks York, Sterling Smith. Sterling coming to you from Omaha. I am down in Southern Illinois. Ashley is from Texas. Ashley's telling me that fall weather has finally hit Texas. Sleeping with the windows open and that good feeling. It's a little chilly here in Illinois. What's it like out in Nebraska,
Well,
Sterling?
it's been warm actually. We've had to use both the air conditioner and the heater on the same day. So the leaves have not changed yet. So we're getting close. We're supposed to get some rain. We're supposed to get actually a lot of rain, and it hasn't happened yet. So we're getting right to that edge. I expect in 2 weeks, so we're probably going to be falling off the cliff.
Yeah. Well, kind of fundamental change for our area down here. A lot of conventional full season soybeans are out of the field. That's a big trend changer over the last few years. It was always corn first, beans were left. We're
Yeah.
seeing a lot of corn standing. Little tough time on drying down here, and yields just absolutely all over the place. I wish I could tell you that it was good, it was bad, but I hear a little bit of both. Probably a little bit more of a surprise on better yields than poor yields. How about Nebraska, Sterling?
Well, if we look at total harvest progress, we're 43% for soybeans done nationally, which is a huge number. That's running about 10 full points ahead of last year. With this rain that they had predicted, it's supposed to show up today, Friday. We had 5 days of just spectacular weather, 75 and sunny and beautiful. I haven't been too far out of town, but I've got to imagine if you could harvest, you went full speed on everything the last 4 days as fast as you could to beat this rain. So I suspect we're going to see really good harvest numbers. I think yields, I think again, we're going to have variable. We had spots here. Guys got more rain than, the guy 40 miles away, and that's going to affect that. Harvest pressure coming in weighing on soybeans. The fact that we've harvested 43%, and let's just for all practical purposes call it half. That's how many billion bushels of soybeans? Quick test for everybody.
Oh, I'm going to guess it's
That,
1.89 billion. How close am I?
well, soybean production expected to be 4.1 billion. So we're talking 2 billion bushels of beans have been scooped up and harvested in the last 3 weeks, 4 weeks, what have you. So that's a lot of beans coming to market in a big hurry. And we'll see how inspections do and how we do about moving these, but we're going to need exports are our biggest worry. And that plays into all of the macro political worries that we have going on right now.
So let's talk about that real quick. I know it's a WASDE day. It's not a marketing day, but next Thursday, I want to make sure everybody tunes in to that marketing meeting. I don't know if we're going to have great news on prices, but we're going to finally get another component to talk about besides maybe some help from soybeans. And this guy that we're with, Sterling, he's got the global background to kind of tell us specifically what to watch out for. Right now, Sterling, I read all of the pundits in the morning, and this doesn't look like it's going to have any impact on anything. I know you're a little skeptical about that. What do you think?
Well, the initial situation, the what is going on right now is to a limited area within the Gaza Strip. For those of you not familiar, the Gaza Strip is an area, basically it's 10 miles wide, 14 miles long on the edge of Israel, and it's 140 square miles occupied by about 2.1 million people, making it the third most densely populated place on earth outside of, I think, a couple of cities in China. The population density is higher than what it is in Manhattan. So thus far, this has not affected any oil shipments. This has not affected any oil production. It hasn't led to any geopolitical movements. But the key word about all of this is yet.
Yeah.
We have to see one, there's obviously going to be the Israeli reaction, how the reaction after that, and this is very similar to what happened in 1973 with the Yom Kippur War. The reaction came weeks, months afterwards, where if we were to see an oil embargo, obviously that has implications for crude oil prices. If we were to see some degree of a grain embargo, which is always a possibility. So we have a lot more things that we don't know concerning grain
Sterling,
prices.
something that is a little bit different than maybe any of those other times is seeing a little bit more coordination between some of the Arab nations and the Persian nations, and specifically Saudi Arabia and Iran actually having dialogue over this. That is a red flag to the things that you're talking about. Kind of explain that to everyone.
Well, Saudi Arabia is a major oil exporter. Iran is considered a player in this and not a major oil exporter into the Western world, but they are an exporter into some places where we're not supposed to be doing business. We'll just put it that way. If we were to see Saudi Arabia cut back oil production, that would be, or embargo sending oil to the U.S., any one of a number of things, that would send the price of oil up catastrophically. I'm not talking, $8, $9 a barrel. I'm talking $35, $40 a barrel. That will in turn have economic shocks that reverberate back into our inflation issues, our interest rate issues, and all of this other stuff that was going on leading up to this. Because remember, we were not in all that great a shape, on Thursday of last week. Crude oil prices had just collapsed because we saw gasoline demand fall through the floor. We have, interest rates moving up and creating all kinds of different discomforts. Then you throw this on top of it, kind of move that, aside for a bit. But if we are to see if they begin to work as a unified front, particularly if you throw Russia and China in with this group, then we have a whole set of problems and a whole set of different calculus going on. Because remember, the Saudis and the Chinese buy a lot of the bonds that we need to sell to finance our debt. Again, if they put their hands in their pockets, interest rates go up, the dollar goes up, and a lot of other things will move around.
You can kind of see how that trickles down, and of course we see it in inputs on the farm with the farmers that we deal with. We also, Sterling just said it, interest rates, and then the big thing, I think, is the biggest thing long term is how does it affect global demand, and that kind of goes with the possibility of some type of embargo to different places. And there's always these unseen repercussions that we're not even talking about today that we don't know. Well, that kind of whets our appetite for next week. But right in front of us, 7 minutes from now, we've got the WASDE report. We sound like broken records on this, Sterling. We're going to talk about yield. We're going to talk about exports. What else is there to talk about on this WASDE report?
On this report, there's going to be talk about exports and there's going to be talk about yields. Because right now, this is what's driving the main components. We could potentially, there's a slight chance of seeing a change in harvested acres, but I seriously doubt that that's much in play. Number one concern is when we saw the quarterly stocks report last week, it was higher than expected for soybeans. If we raise the soybean carryout from last year, that basically just adds some fat to this year if we don't see any changes in production. Things I'm looking for that might be a little bit different would be a change in soybean yields. Which way are we going to go with that? And here, let's go ahead and switch. As you can see, prices for things are not really behaving very good, so we just won't even look at that.
As Sterling switches that over, if we keep this very informal, if you got any questions, shoot them out there in the chat box. Even if it's unrelated to WASDE, if there's anything we can answer for you when the report is released, we'd be happy to. Sterling, you're going to look for some bean numbers, it looks like.
Well, we have some bean numbers. We have some corn numbers. First of all, the corn ending stocks. Well, let's do beans first. Okay, soybean ending stocks are expected to be 2.32. Now that's 12 million bushels more than we had last time. When I did my balance sheets, my number was actually a little bit higher than that because I added some into the carryout based on the quarterly stocks number. What are we going to do with bean yields? That's the real question. Soybean yield per acre, 49.96 is the survey. The last time is 50.1. Soybean yields are really hard to get right, and the difference between 49.96 and 50.1 isn't that much in terms if you're looking at one field, but when you multiply that across the number of acres we plant, it's enough to move a very sensitive balance sheet. My guess is we saw a little bit of an uptick in conditions around here. We got a little bit of rain. My guess is we're going to see maybe bean yields go up just a bit. Corn yields are the next big question. Corn yields right now, 73.68 is where the survey is. So basically 73.7, knocking a tenth off. When I did my corn yields, I knocked 2/10 off, kind of where that put me. That left ending stocks down a little bit, but this corn export number at 2050, I shaved 50 off of that. The soybean export number at 1790, I shaved 15 off of that.
Let's talk
Right.
about that corn export number. That thing has been all over the place. I think maybe we started that as high as 2.4 billion months ago when we
Yeah.
looked at projections. I've got friends in the business that think it can be as low as 1.75 billion. I like the 2 billion, mainly because of the vast uncertainty we're seeing in Ukraine. It certainly looks like Ukraine supplied somewhere in the neighborhood of 600 to 650 million bushels of corn to the world marketplace last year.
Mhm.
And that's a huge question mark that you're not seeing on the headlines right now, Sterling. Any ideas of what their capability is for even shipping corn out of the Black Sea and their ports right now?
Yeah, it is difficult. It's a war zone. The problems are ongoing. There's been infrastructure damage. They will have trouble shipping it. So what they're doing is that they're shipping it via rail into Poland, which is aggravating the Polish and Romanians' condition. Our problem is China not buying corn. We had become accustomed to China buying corn. China had not historically been much of a corn purchaser from us. China doesn't come in and buy corn. That all of a sudden that adds that 250 million that we need to get rid of. If we were to see some embargo of activity or some sort of geopolitical move, we're going to need help from our friends. South Korea, Mexico, Japan, and everybody in Northwest Europe. The problem is that
Interesting.
Ukrainian corn makes its way into Romania, which Romania is one of these. They're not an also ran. We're becoming a better corn producer. That moves that corn into Western Europe, and that creates a little bit of pressure. The one thing we're doing good, where we're winning, is soybean meal. Soybean meal exports continue to be good. Crush continues to be good. So that is one area that's supportive. And if we see lower corn prices, that can increase livestock production in Northwest Europe, which in turn increases demand for our soybean meal.
Let's talk
So
about soybean meal real quick because Sterling, we've kind of talked about it almost being the third commodity of corn, soybeans, and soybean meal. In November, you just kind of mentioned it in the talk prior to us hitting the record button. We're going to probably look at a climate company joining us in November and specifically looking at South American weather, specifically Argentine weather. Um, as it relates to soybean meal. So
yes.
again, we're going to have our eyes on Argentina and see what happens down there. Why Argentina so important to the soybean meal number, Sterling?
Well, they were the number two processor. They were a major player in the export corridor. Their inability to produce crops consistently, their inability to fill contracts, and our better quality soybean meal, the amino acids, etc., we've gained some market share. And it's 11 o'clock, and we should be getting a WASDE report here. And there we go. Corn ending stocks at 2.111, a
Wow.
little bit lower than
Yeah.
expected. Corn exports 2025, they shaved 25 there. Yield per acre 173.0. So that's where we made up the
Yep.
difference. We had lower yields. Soybean ending stocks
Bingo.
220, sharply unchanged. Soybean yields 49.6. So we shaved some of that. But look at this export number 1755. Shaved another 45 off of that. So some problems with that going forward. Soybean yields are tricky. That yield number can go up. Exports aren't tricky. That
Yeah.
number may go down again. That's a problem. And let's look at our friend wheat. Wheat ending stock 670. We were looking for 648. So, and we're 615 in the rearview mirror. So that number is a smidge bearish. Exports tied at 700. Yields at
Production number.
48.6.
Yeah.
Production, yeah,
Wow.
production up a little bit as expected. That was not that big of a shock, really, to what was going on. Let's see what we've got here going on for our friends in Brazil and Argentina. Brazil, 129 on corn production. That was unchanged from the USDA. Soybean production, 163. Looking at Argentina, old crop production, 25 million was all they did last year for beans. That's their problem. 48 this year. 48 is kind of like when you fill out the form and guess this, you rewrite in 48. It's kind of the default number. 55 for corn. So again, Brazil's production expanding. Argentina is flat, and that can create some issues going forward. Market reaction. You want to go ahead and switch and take a look here and see what we're doing there?
Let's take a green. Let's see some green.
Let's see some green. I think I might be able to show you some green somewhere. I mean, I can always find green somewhere, but all right. So corn, we're doing a little bit better. We're at 4.89. We are up a penny. March corn at 4.04 1/4. We're up a half a cent. Soybeans, a little bit of a relief rally here. The market didn't get the higher number it was looking for. And if you'd been following the daily stuff, we have seen a bit of a small short position build in the soybeans from the fund side, and that is producing a little bit of a rally here. We're up 12, 13 cents. Meal up 2.5%. The leader, soybean meal. And moving on to the wheat, half a cent higher in Chicago, Kansas City, and Minneapolis continue to get beat up.
Wow.
So,
well,
one thing about the wheat, and I know I've been writing this and been looking for this, and so far all I've managed to do is hurt my head. December, there's a big fund short position in Kansas City and Minneapolis. Normally, if we see a rally, those two lead us out. At some point here, we're going to reach terminal fund short, and they're just not going to be willing to sell anymore. Heaven knows what the price number is behind that. But eventually that will change, and those markets will snap a lot harder because they're a lot smaller than the Chicago wheat market.
Keep in mind as we look at that December price, this is a critical month for everybody here, and 488. Sterling, let me grab a slide here. I want to talk about that corn price in relationship to where we're at. I'm going to use 488 3/4 on this slide. All right, let me take the ball for just a second.
Let me stop sharing. That's
all
the
right.
First thing I need to do, and now you're good to go.
Okay, I'll make this into a big screen. Keep in mind this is not necessarily fresh, but where corn price plays in, and Sterling, let's talk about this just a little bit, because there's tremendous amount of corn going to the market, either locking in some pretty poor basis levels or spotting or going on DP. Remember back here in February, for most of you listening, this is the February 1 through 28 average. 591 is where we're at. 85%, 502. Now, we all know that doesn't mean a claim for certain, but at an APH type yield, we're starting to get in claim territory. 80% is 473. It takes a long move down for that 75% to kind of that next trigger point in there to kind of show you where things are at. But this is going to be critical to watch over the month of October. Now, Sterling, we kind of know, we got to be real careful how we say this. Like I said, at an APH type yield at 502, if you had 85% revenue protection, you're getting close to claim territory. How does that affect how we market the crop? And before everybody gets off here, we mentioned short puts, and I know we scared people to death. Sterling, walk through why a short put is a relative safe play when you've got these type of insurance guarantees out there.
Okay. Why I kind of like the short put idea right now. First, we have a big fund short position in a rising interest rate market. That means risk capital becomes less and less available every day. So their ability to drive this lower and sell this is probably encumbered. Two, these guys they're fairly smart. They're not going to try and sell something in the hole. The worst thing you can ever do is go sell something after the price has completely collapsed, which I'm not saying corn prices have completely collapsed, but they've pretty much done that. So your downside is limited. So they're adding to the short position, creates a floor. When you sell this put, you bring in revenue. You will get paid for it. If you have the insurance coverage to cover you going down, that effectively works the same as being a short future. If you sell puts in the market and you're a professional market maker, the way you hedge your position is you look at the delta of your short put and you sell futures to lay that off. That's why when we see bearish positioning get offsides, it gets to be too much. They have to go in and remove this. It creates bullish fuel. And the perfect example of this was the stock market over the last 4 or 5 days. We had that bad bearish jobs report. It was huge. Rates spiked. The stock market went down initially, but didn't break the 200-day. So they started unwinding that position. We had the situation combined with the holiday over the weekend. Stock market didn't fall apart again. All that had to be unwound. And that's what's produced this burpy little rally we've had the last 4 days. Same exact procedures in the grain market. So if we see these prices getting lower, we can maybe collect a little bit of rent on that short put. And, advice on this, if you're uncomfortable with it, really uncomfortable and scared, don't do it. If you're new to this, don't do a whole bunch. Try a couple. Do two.
I like
So
the analogy of it being rent. This is not money that's going to make your year. It's a way to supplement something in a pretty poor situation. Sterling, I'm kind of looking at strike prices right now. We're seeing some of these puts. And at the money, I'm gonna call it 485 is around 14 and a half
are
cents.
you looking for
So
December's? Is that what you're looking
I'm
at?
looking at December's, and we can, I'd probably opt to go to March if I were doing it myself, just
Well,
because of time value.
there's
24
here.
cents for a
There's
$5.
there's a couple things about this, and I'm not going to go too far into the Greeks and too far into the weeds. Theta is the time decay portion, and that works on a curve. It works like this, and then here, let me do this camera, and then it goes down. It goes down a lot. This turn curves at about 33 days out of expiration. Anything before that, you're kind of sitting, you're sitting. Yeah, you got a lot of money for it, but you're holding risk and you're not going to get paid for it properly. When it starts to curve, that's when you make money quickly because that option decays in a hurry. So what we want to do, and you can do this, you can also ladder this. You could do some nearbys and some out if the premium is really good. So right now, looking at puts, if we look, December corn is at 491, and we do a 480, we do a dime out of the money. With 15 days to expire, you can make 3 1/4 cents a bushel. Not bad, not huge, but you also only have 15 days to get there. If you go out to December and you want to do that same 480 put, it's priced at 7 3/4, which is about parity. So pretty much you're getting paid the same for each one, so the market is fairly priced. You're not getting anything excessive. Corn's up a little bit, and that's draining a little bit of premium. You
Yeah,
go all the
be
way out to
careful.
March to do that 480, you're getting paid 11 3/4. Now, if I add up what I get paid for the December and the Novembers, I get 11 3/4 cents selling one of those and one of those. That's 11 3/4 cents, and I'm done without having to go out to March. So that tells me those January doing the November Decembers are in fact a better deal because I don't have to extend the time.
Yeah, it's one of those things you want to definitely consult with a professional before you do them. There is some risk that's associated with them, but the timing certainly looks good. We rarely talk about these things
Yeah.
on our calls in depth, but it certainly looks like the environment is right.
Yeah, and if
You got
anybody
questions on
has
that?
any
Let us know.
questions about the math of this, about how this works or anything like that, feel free to call me because I'm not going to give you the broker's story and try and get you all a commission or anything like that. I will tell you how this works, exactly how it works correctly. So,
So Sterling, we got about 3 minutes on here, 3 to 4 minutes left, and we kind of thought maybe what we saw would happen today with a smidgen lowering of the corn yield. I think that was kind of in the marketplace. Thus, the market's kind of, I don't know, yawn. The beans, maybe a little surprise at that
Little bullish
49.6.
surprise in that they did not increase it. And
So
they cut yields, but here's the deal, the next report will be more interesting. So,
certainly not necessarily a ho-hum report, but not a barn burner either.
yeah.
As we look at the meeting next Thursday, I know we're going to have some folks drop off here in the next few seconds, and that's all right. But as we look at the meeting next Thursday, I really want to key this one up because we're probably not going to talk about specific market movement between now and then. Odds are we don't have that game changer event. Sterling, I think what we've got to do in that next Thursday meeting is really get a grasp for what we need to be prepared for over the next 90 or 120 days, because we got something that's been different in the marketplace than we've seen the last 4 years, and that's our farmers. And if you're on here, you probably understand this very well. They're going to need cash, and when farmers need cash, grain and oil seeds go to the market regardless of price. In a lot of cases, when you got to have the dollar, you've got to have the dollar. We're going to talk a little bit about that in that meeting. So I think that's going to be valuable. I'm going to invite Elliot Konchak to be on with us. He is going to talk about band and the profit matrix. The profit matrix is a tool that's held in AgriNet. Um, Honestly, we probably haven't had to use the profit matrix intensely over the last few years. I want to make sure everybody understands that tool is available, and we've souped up the expense side. I want Elliot to show us how band plays into it, because my eyes were opened where I didn't think band could work at all. And I think it could change your perspective a little bit too. And more than anything else, I think our customers are going to demand us to know this information, at least in the next crop year out there. Sterling, what else have we got next Thursday?
Well, next Thursday, I'm going to play a little bit by ear in that because the global situation develops, we could be looking at any one of a number of scenarios, particularly around the energy market. One thing I would like to point out: a week ago on Wednesday, the DOE put out a report on gasoline consumption that showed gasoline consumption down to the lowest level for this time of year since 1996. Since the pandemic, data has been a little bit shaky sometimes. That report just came out just a few minutes ago, and it has put all of that production back in. So that item that broke the crude market now appears to be fixed. I wouldn't expect too much immediate volatility in crude oil until something happens to affect the delivery or production of it.
Very, very good. We'll talk a little bit about Farm Bill as well too. There are some marker bills. I know we're kind of on hold on the Farm Bill. Pending government shutdown doesn't bode well for us getting things done. The
Yeah.
thing that doesn't stop during this time are the marker bills, which are kind of looked at as an amendment to an omnibus bill. They're kind of add-ins that are being looked at. There's a couple of them out there that are very, very concerning. We're going to look at a couple of those as well. So we got a packed program
And
Thursday.
one other thing we need to talk about, the other thing that can help us, the dollar index and where we are with that. If we could get that to stop going up, that would be something that would at least take a headwind away from the weight that we're seeing on grain prices.
Very, very good. Appreciate everybody's time. And hey, it could have been worse, right, Sterling? Maybe not
That's right.
to the moon, but it could be worse.
It could be worse. And make sure, if you're not listening to the podcasts, make sure you listen to them in the morning and the evening, as all the details get covered a little bit closer than what we can talk about here sometimes.
Awesome. Well, thanks for joining us, and we'll see you next Thursday. And for the next month's WASDE, be ready, and we'll put our seatbelts on and see what the market's got in store for us. Everybody have a great Thursday.